to you all. St Swithin's Day today. Who knows what St Swithin's Day is? Apart from being an odd-named day. It's actually, apparently, folklore has it. Yeah, rain, says Stefan. Well, we need a bit of rain, Stefan. We've only had 5 months worth of continual rain with 1 week of summer in June. Was it the second week in June? Yeah, it doesn't make a summer. It definitely doesn't. Gosh, no, it's and we made the decision to stay in the UK and enjoy the British summer from June until September. That's Then my wife said, why don't you check and see if we can get a last minute break? Not a chance. Not a chance. There'll be 200,000 Jerry Millers all thinking the same. Yeah. Yeah, if it rains today, that's right, Gerald. If it rains today, it's going to rain for 40 days. It probably will anyway, looking at the forecast. Anyway, there we go. Sad about England football, but it's not a bad showing though. 2-1 against the best side in probably in the world at the moment. I'm not a massive footy fan, but I thought they did well, and I think at least we can. If you are English, you can be proud to be English. If you're not, you might be smiling. I don't know. Some other countries are getting worse weather than the UK. That's right, Michael. I think this is we've transitioned from El Nino to La Nina, have we? Something like that. But these are these sort of rather extreme weather patterns, and it starts off in the Pacific, just off the the west coast of South America. And it's the sort of changing the sea temperatures, which affects the atmosphere, which really kiboshes our weather, really does. You think if we're getting all this rain, what else is happening where it should be raining? Well, they're probably not getting any rain. Yeah. Stefan says they might have done, but for the manager. Wow. Yeah. Yeah, but yeah, it was interesting right at the end. It should have been 2-2, shouldn't it, at full time? But it wasn't, and thereby hangs a tail. Let's move on. Interesting week we have here in the UK. We've got our inflation data out, which will be really important ahead of the Bank of England's policy meeting. I think it's on the 1st of August, so roughly a couple of weeks' time, really. And that's what's driving our sterling markets and pushing sterling up to several-week highs last week. Yeah. Oh gosh, yeah. Japan. I did hear about flooding in Japan. Yeah. Thanks, Michael. A place. Everyone's going to Japan. You know why they're going to Japan? Because the Japanese yen is so weak. For a country that used to be quite expensive, actually, it's not bad value now, apparently, so I'm told. Anyway, talking of UK assets and sterling, last week, the FTSE was really probably one of the sort of more struggling markets, and then with the first week of the new Labour government, I guess it's because the focus is on what the Bank of England may or may not be doing. There was a lot of talk from I think the chief economist at the Bank of England, a chap called Hugh Pill. He talked about strong service sector inflation, which would be increasing the risk of persistent inflation. I think a lot of Bank of England watchers were a bit disappointed in that, because Hugh Pill had previously argued for a rate cut. So yeah, there's that. And then we had that monthly GDP data for May. It was the month-on-month data, if you remember. So we used to get quarterly data, but now they publish this monthly data. But the monthly data, here it is. It came in at plus 0.4%. And I hear you thinking, but Jerry, surely that's good for sterling. That's good for our economy, the fact that it's doing better than expected. It's double what we were expecting. Plus 0.2% is what we were expecting, came in at plus 0.4%. Well, you can't have a strong economy and have interest rates being cut, because when an economy is performing well and the economic activity is picking up, the money supply, there's an increase in turnover in money. It's the the velocity and supply of money going up. And that's something that the Bank of England will want to keep an eye on. And I think that's really reflected in this strong service sector inflation that Hugh Pill talked about. Anyway, the problem with it is it does pose a problem for the Bank of England, because the Bank of England is really obviously preparing possibly to discuss a rate cut at its meeting on the 1st of August. And I think the problem is that with a stronger than expected economy, the symptoms also include price pressures. And when I mean price pressures, I'm talking about inflation. And that's something that the Bank of England will be mindful of when they consider the first cut in interest rates since the pandemic era. Yeah. Anyway, following Mr. Pill's comments, I think he was talking last Tuesday. Let's have a look at sterling. Yes, that was on the 9th. Anyway, on that particular day, forward interest rate swaps. These are the things the instruments that tell us what interest rates will be on those days when the Bank of England meet. Anyway, the probability of a rate cut happening on the 1st of August has declined to a 50-50 probability. And you might think, well, that's still possible. Yes, it is, but it was 65% on a day before. So on the Monday, there was a sort of 65% probability of a rate cut on the 1st of August. It's now a 50-50 call. So there you go. And that's the reason why sterling is stronger. Why? Because if interest rates are less likely to be cut, it's a better return holding sterling if interest rates are going to stay at 5.25%. That's exactly how to read that. Yeah. Countering that, when you look at, and this is sterling against the dollar, US markets were in a different sort of phase last week. Yes, pushing into record territory again. We had better than expected inflation data out in the US. Headline data, that's a good point. There we go. Yeah. So it's a core CPI that we're looking at. That's the one. Everything's core. It removes all the bits that make it read bad. No, not really. It's designed to be able to make sense of data where there's seasonal influences, like non-farm payroll. They call it non-farm. It should be just called core payroll, really. Anyway, the core CPI came in at plus 0.1%, but the headline rate actually fell 0.1%. So month on month, that is. But the core inflation came in at plus 0.1%, which was better than the plus 0.2%. And this is down to what we call, it's referred to as shelter costs or housing inflation, which had been a real problem that had pushed inflation up over the last 3 months. And that has started to cool a little bit. Anyway, the Fed and we, the market, were pleased with the data. As you can see here, the S&P's pushed higher. Bit of a down day on Thursday, but generally the market, is forging ahead into record highs, as you know. And really, the market basically jumped because it believes that the likelihood is that the Fed are going to be cutting rates definitely in September. And in fact, investors priced in a near certain rate cut in September. Let's have a quick look at that. So currently interest rates are at 5.25% to 5.5%. They have a band in the States that they operate within. But on the next meeting, on the meeting but one, so the next meeting is on the 31st of July. We do not expect any move in interest rates then, but on the 18th of September, which is the last meeting before the presidential election, believe it or not, there is a meeting just days after the presidential election, but it's likely, and Biden will be pleased, that there's going to be a rate cut to 5 to 5.25%. But that's not just the only good news. When you look at the 7th of November, there's a probability of another rate cut to 4.75% to 5%. And then when you actually go to December, there's now a sort of 55% probability of another rate cut. So already we're talking. Powell talking at, that's right, Michael, he's at the Economic Club in is it Washington? Yeah, that's a really interesting one. We'll get onto that in a second, but yeah, anything that these central bankers, especially the chair of the Federal Reserve, says is always interesting. Anyway, so there we go. So on the one hand, in the UK, you've got inflation expectations, but also the economy doing rather well. That's dampening down rate cut expectations. Conversely, in the United States, it looks like there is a greater probability of more rate cuts. So at one stage, there was talk of a rate hike about 5 weeks ago. Anyway, so we're pricing in up to 3 rate cuts in the US, and in the UK, possibly one in August and possibly another one in December, but it's going in the other direction. Hence the reason why sterling has done so well, because you're going to get a better return holding your money in sterling than you are in dollars. If interest rates go down to 4.5% in the States and remain at 5.25%, why wouldn't you keep your money in sterling? Yeah, Gary, absolutely. Gary says, so possible weaker dollar going forward. But remember, Gary, markets react to expectations. It's often, when we talk about sell on rumor, buy on fact, everyone is positioned because they believe that the dollar is going to weaken, and it has weakened. And you can see it here in the dollar index chart here, and it's been plumbing the depths. And you're going to have to go back several months now to see where it was. Last time it was down here, you're talking about mid-March. Yeah, definitely, Gary. If anything, the dollar has weakened, and it's continuing to weaken, and it's all to do with what economists call interest rate differentials. That's a key driver in the pricing of foreign exchange markets. Hence the reason why we listen to what central bankers are talking about, because they're the ones that set interest rates, and it's inflation that affects what these central bankers do. And in the States, it's also United States, it's also employment data. So yeah, that helps me. Yeah, that sort of squares the circle, doesn't it? Anyway, Mr. Powell last week was talking. He has this testimony to Congress. It's called the Semi-Annual Monetary Policy Report, where he has to tell Congress how the central bank's doing in managing inflation and the jobs market. And he said he believes, this is he being Powell, said he believes that inflation is slowing, but said in his testimony, the question is, are we sufficiently confident that it is moving sustainably down to 2%? So 2% is the Fed's target. It's the Bank of England's target. It's the European Central Bank's target. 2% is the perceived stable inflation rate. Anyway, Powell then said, I'm not prepared to say that yet. So he said he's not confident yet, but I guess economists and market traders can afford to be a bit bolder. And certainly when you look at these forward rates here, the markets and external economists believe that the inflation data will support 2, if not 3, interest rate cuts by year end. Of course, you're all going to say, but Jerry, what happens if the data comes out and it's stronger than the central bank expected? Well, all bets change again. Remember, this is a fluid graph. It's changed. It's been updated every minute of the day, 24 hours a day. Yeah, nothing is certain. This is why we trade these markets. If everything was certain, it would just go in a straight line, up and then down. But the market is reacting to data, events globally, locally, and that's what drives these markets. Yeah. Right, currencies, just very quickly. Well, of course, we've talked about it in a way. We know why sterling rallied against both the euro and the US dollar last week, because because certainly even in the European Central Bank is expected to make 2 further rate cuts this year. It's not going to do it this week. We have got a meeting this week, but not this week. but it just looks like everyone sort of had written off the UK economy, and it was at the bottom of the G7 growth table a year ago, and now it's mid upper table. And yeah, we just shouldn't get too bogged down by people trying to write it off, write the UK economy off. Well, good for the Labour government, incoming government. They're benefiting from something that clearly wasn't there down to them, but the economy is improving. Let's hope they can nurse it and continue to get it to grow. It's in everyone's interest. Japanese yen. I've had a question about the Japanese yen. Okay, yeah. Well, the Japanese yen. This is all to do with. It's all to do. Oh, I logged out then. This is all to do with intervention in the foreign exchange markets by the Bank of Japan. The threat or the perceived threat. It's a big move last week. The Bank of Japan are meeting. When are they meeting? I think they meet again. I think on the 31st of July to set interest rates. Anyway, the Japanese yen remains the worst performing currency this year by some margin, and it's something that the Bank of Japan are getting a little bit more sensitive to, and the forex community, is very nervous about the yen above 160. As you can see here, as soon as the rumors spread, down she came. I say down she came. That's the yen rallying. This is the number of yen to the dollar. So the higher the number of yen, the weaker the yen, the stronger the dollar. So this was the yen rebounding sharply against the dollar, because of that very fact. Very quickly, commodities. Look at oil. Weakening again today, although rebounding a little bit. I think the threat of major disruption. Do you remember that Hurricane Beryl? I think it was. Obviously, all those risks have abated now. I think we've had some Chinese data already out. Yeah, we've had some poor, better than expected industrial production, but some pretty bad GDP data. Last week, we had the CPI and PPI data out of China. That's inflation and the producer price index, which suggests that factory gate prices continue to fall, which is fueling further deflationary pressures coming down the line, which will inevitably lead to less demand from China. Just remember, China's the world's largest oil importer. Hence the reason why oil has been under a little bit of pressure when you get sort of slightly bearish or worse than expected data from China. Gold, everyone asks about gold. Everyone's a gold bug. Yeah, everyone's a gold bug, or he likes to know what gold's doing, but trended higher last week, really on the back of the weaker dollar. It's a dollar-based commodity, dollar-priced commodity, and also, I guess, prompted by lower than expected inflation, which weakened the dollar. Ironically, it used to be a hedge against inflation, and you'd think when there's lower than expected inflation, gold would go in the other direction. But it just goes to show the effect that the dollar price of the dollar has on gold is more important than inflation these days. Yeah, interesting. Okay, let's have a look at the calendar. You've been very quiet. Any questions, please? No question is. There are no stupid questions. I enjoy answering any question. No matter what, about anything, please ask me. Anyway, this week, interest rate decision for the bank, from the European Central Bank, the ECB, and we've got UK inflation data. I've talked about that, and our unemployment data or employment data here in the UK as well. So we've already discussed the GDP data. That's Q2 GDP reading, quarter on year, that is. Expected at 5.1, came on at 4.7%. That's sort of quite a disappointment, really, because the Chinese economy has continued to improve. I mean, obviously, it's telling us what had happened in the second quarter. That's April, May, and June. So it's sort of backward looking, but it's still disappointing. Okay, first number of the week this afternoon. That's Empire State Manufacturing. The Empire State is New York State. Big state, actually, New York, and it's got a lot of manufacturing businesses in it, especially in the north part of the state. Still struggling. 5.5% is what minus 5.5 is what is expected, but certainly an improvement from the first quarter this year, but still in negative territory. Mr. Powell speaking already. I think Michael mentioned that Jay Powell is chairman of the Federal Reserve, the US central bank. When he talks, we all listen. He's speaking at the Economic Club of Washington, DC. And what's interesting about this is there's a Q&A session at the end of it, which may interest markets. It certainly will affect them if he says something about the prospects for rate cuts, etc. So the US dollar and US assets, I'm sure, will be on guard for anything coming out of his mouth. 5 o'clock this afternoon. Tuesday, would we jump to core retail sales? Another core reading. Core in this regard, core retail sales actually excludes auto sales, car sales to you and me, auto sales in the US, but and the reason being that they're actually quite seasonal and have too great an influence on the reading, so they exclude them. So we get a good idea about the rest of the retail sales and how they're doing. So plus 0.1% month on month. Michael, will the gun laws change in the US now Trump has been injured? Gosh, Michael, that is a good question. I think the National Rifle Association are so strong, there's not a chance in hell, even though someone like Trump, who was very in favor of keeping the status quo, he got shot in the ear. I mean, how far away was that from really damaging him badly? I'd say an inch, wouldn't you? I mean, just extraordinary. I mean, that's no way, just no way that politics should be run. And they do have a history of political assassinations in the States. But thankfully, getting rid of a politician like that is not the way for democracy to function. Whether you like or don't like Trump, that is irrelevant. The fact is that is just not what you want to see in a democracy. Second Amendment, yeah. I mean, Stefan, I think the problem with the constitutional right to bear arms, this was in the Wild West. Things have moved on, and the problem, it needs updating, in my opinion. But hey, listen, you get kids killing kids, school massacres, etc., and still they don't change the laws. That's just the way it is. They can, but they don't want to. Okay, but interesting question about Trump. Yeah, if you don't like him, don't vote for him. But shooting, yeah, I agree, Gary. Yeah, that's not the way to deal with it. It's just don't vote for him. Vote for someone else. The fact of the matter is, the US have chosen two very old people as the candidates to be the next president of the most powerful, economically and militarily strongest nation in the world. It's amazing, really. Have they really moved on? Says Stefan. Yeah, maybe it's still the Wild West. Yeah, but that's when it was written into the Constitution, the right to bear arms, when you needed to protect yourself. But I know mates of mine. I've got one friend of mine who's got two guns. You just think, but he doesn't know how to use them. He just has them. You just think, wow, do you not have to know how to look after them? There you go. Okay, where were we? We were talking about retail sales, weren't we? Of course, because it's still there. Anyway, inflation. Let's get on to that. That's more interesting here in the UK. So GBP, so consumer price index. So that's inflation to you, me, and everyone else. Some economists actually think that UK inflation may have bottomed in May, but you can see here that we're expecting the average call, as published by Bloomberg, is 1.9%. That would be a fall. But the problem with this is that this is a year-on-year reading, and it would bolster the case for a further rate cut in 2 weeks. For a rate cut in 2 weeks' time. But because of the base effect, if there's the slightest nudge in the monthly data, it could cause the yearly data to pop up. So this is what I've been looking into, and it basically means that you only need a slight increase and the yearly number will not jump, but it could come in at 2.1. rather than 1.9. Anyway, it's those headlines that people get affected by. Anyway, sterling and UK assets, so that's FTSE 100, 250, UK gilts will all be sensitive to this release. So please put that one in your calendar. Well, I say put it in your calendar. It comes out at 7 o'clock in the morning, so you have to wait until 8 o'clock before the markets can really react to it. And then we've got following morning, 7 o'clock, we've got UK employment data or unemployment data. Definitely, we've noticed that the UK labour market has continued to deteriorate this year. But if there is good news in more people being unemployed, is that wage pressure and earnings growth are starting to moderate, and that's something that the Bank of England will be happier with. The unemployment rate, it's 4.4%. So I think at the start of the year or the end of last year is at 3.8%. So you can see sort of where it's going, but you sort of expect that really with the cost of living crisis, companies, not recruiting so many, so vacancies falling. And that's just the sort of natural ebb and flows in the economy and the effect on the employment market. Anyway, sterling again will be sensitive to that data as well, but nothing like as sensitive as it is to the inflation data. And then it might have been the release of the week, but it's not going to be, I don't think. This is the European Central Bank's interest rate decision. They make their announcement at 1:15 on Thursday, and we're not expecting any change. We've had one rate cut, and the European Central Bank Council and various members have made it pretty clear that they're on hold just to see the effect of the first rate cut. And it looks like expectations are now for 2 further rate cuts. So you think, well, that's quite positive. One in September and one in December is what is the most likely scenario. There is a press conference that follows the announcement on interest rates, so that'll be quite interesting just to get a better feel of what the central bank are thinking. Trouble is, growth in the Eurozone is not brilliant. It remains weak. I think we've had some pretty poor German factory orders and industrial production data, which really underline the Eurozone struggles. Everyone sort of mentions Germany because Germany is the real powerhouse within the Eurozone. It's a huge economy in comparison to other economies, and it's certainly the largest, larger than obviously France and then Italy and Spain. But without Germany functioning properly at full steam, the growth in the Eurozone is never going to be that spectacular. Anyway, press conference to follow. So obviously Euro, any Euro pairs, if you're looking at any, so Euro versus the dollar, Euro yen, any Euro pair will be sensitive to this announcement, although we don't expect any change. Can you imagine if they did change rates this time around? It's highly, highly unlikely. The central bankers don't want to surprise anyone, at least of all the markets like that, for sure. One more bit of data, Philly Fed Manufacturing Index. We talked about the Empire State one. That's in New York State. This is Philadelphia, another heavy industrial manufacturing base. Better than the New York State, plus 2.7, 1.3 last time. But still pallid growth really in manufacturing. Manufacturing really got hit badly with the sudden rise in energy costs and interest rates and inflation, etc. And that's just the way of it. There's a lot more cost of financing in manufacturing than there is in the service sector, of course. And then, yeah, retail sales. Here we go. I think by then we'd have had our fill with UK data, with the inflation data and the employment data, but retail sales, all very seasonal, all down to St. Swithin's Day. Hope it doesn't rain for 40 days, really. Who's buying T-shirts and polo shirts and shorts? More like sou'westers and raincoats. Michael, there are many vacancies that cannot be filled due to qualification skills required. Yeah, well, yeah, you're right. I mean, my mother-in-law was at death's door over the weekend. She's got COPD and she was in Stoke Mandeville Hospital. My wife had spent 2 days with her, but phoned for an update and couldn't find anyone that spoke good English to be able to explain to her how her mother was. But they're good qualified, they're very caring, good people, but they're obviously being brought in from overseas to fill those vacancies that just can't be filled here. But I agree, Michael. Yeah, yeah. That's an adjustment that we're going to have to continue to go through, but stopping immigration, unfortunately, just makes it a lot worse. We don't get people coming in from the EU anymore. They come in from the rest of the world, and that's and rubber boats across the channel, of course, which is, yeah, that needs to get sorted as well. Anyway, that's it. Thank you very much. It's 9:20. I always set my clock roughly by that. I hope it hasn't been too long-winded, but thanks for all your questions. Good luck with the markets this week, and thanks, Mike. Probably not listening anymore, but thanks for your contribution for the first bit, which is the most important one. Gary, Michael, Stefan, two Michaels. Yeah, have a good rest of the week, and we'll reconvene again next Monday. Yeah. So thanks very much. All the best, and bye for now.